Good evening, ladies and gentlemen. It's my hope that you have had a great weekend. Welcome to the Forex Crypto Hub weekly market forecast for this week. We are going to start our market analysis as usual, where we normally carry out the three types of analysis, starting with the sentimental analysis, fundamental analysis, and then we conclude with technical analysis. So first things first, we go to my FX book, so that you can check on the sentimental analysis part. And I believe, guys, this week you have experienced something from gold. And if you remember correctly, on Sunday we had seen that under sentimentals, but we ignored it. So once you go to my FX book, you come to where we have community, and then you drop down there. We have sentiment. We have sentiment there. So you go to sentiment, and then once you are under sentiment, uh, you can drop down there. You are now going to see these sentiments. So the first one is for GBPUSD. You can see we have 60% of traders are on 60% of traders are on sells, and then we have 40% of traders are on buys. So 40% of traders are on buys. So in this case, this week we will be looking for more buying opportunity. So on sentiment, what we normally do mostly is that we normally go with the minority. And in this case, the minority is this 40% for longs. So this week we will be having more buying opportunities on GBP USD. That is based on sentiments. When we go to technicals, we are going to see whether there's something different on that. Coming to USDJPY, you can see shorts are 67%, longs are 33%. So longs, I'm going to give longs the day. When we go to technicals, you will see that we have that set up for last week, and it's doing well. So for the other pairs, if you trade the other pairs, you can just look for the pair you trade and see what sentiments are telling you. So let's check on gold and then we proceed. Let's check on gold. XAUUSD, where are you? Remember, the war is still ongoing. The war between Iran and US and Israel. The war is still ongoing. So in this case, you can see 42% of traders are on sells, while 58% are on buys. So based on sentiments, sells we have the day. Remember, last Sunday we had this kind of data, of which I can't recall the percentages, but if you go to YouTube and check on the video I uploaded there, you will see the percentages. But we ignored these facts. We ignored these statistics, and it happened. Last week, the best part of it, gold was on sales. So this week, let's not be ignorant. So let's check on now fundamental analysis, where we are going to use forex.com, forex factory, forex factory. That's the website you are going to check on and look on now fundamental analysis. You click on calendar. Talking of fundamental analysis is now about trading news. Shit. What? Hey, sorry guys, bana. My mic was mute, and I did all that while my mic was unmute. So what I said earlier here is that you go to my FX book, where we have community, and then you drop down there, you are going to see sentiments, and then under sentiments, now you drop down, you are going to see all this what we have gone through. Sorry about that, I will have to. So the first one was GBP USD, GBP USD, GBP USD, and you can see that 1% of traders. Sorry, this is Euro USD, happens to be the first one. So sentimentally, you can see that 1% of traders are on shorts while 69 are on buys. So in this case, I'll join the minority, which is now the 31%, and look for sales on Euro USD. The next one is GBP USD. For GBP USD, you can see shorts are 60% while longs are 40%. So in this case, I'll join now the 40% of traders in this case and look for buys. Technically, we are going to look for those. Now, this is sentiments. You can now check on the other pairs which you trade. For USD JPY, you can see 67% of traders are on sales, while 33% are on what? 33% are on buys. So in this case, I'll join the minority, which is now the 33%. You can check on other pairs which you trade. You can check on other pairs you trade. Uh, so, huh. Talking of sentiments or sentimental analysis, I'm sure you have all heard of COT report, the commitment of traders. So this is the same, of which in COT you get deep data. The data is much detailed compared to this one, but this one can help you. So let's check on gold. Let's check on gold. Let's check on gold. Let's check on gold. XAUUSD, where are you? XAUUSD. XAUUSD. Where are you, gold? So here it is. Here is gold. XAUUSD. Here it is. So here is gold. Here is gold. And when you look on gold, let me admit someone. Just a minute, I admit someone. So we can proceed. So when you look on gold, you will see that XAUUSD, here you are. You can see that shorts are the traders who are on shorts are 37%. That's 7%, while 63% are on buys. So remember last week on Sunday we had this kind of data, and basing now our argument mostly on what was happening over the weekend, the outbreak of war between Iran, Israel, and US. We went in for the buys, of which the market on Monday, yes, the market bought, but if you check the entire last week, sales carried the day. We had this kind of data as we have right now. We were expecting sales to carry the day, but we ignored that fact, and we had the other way around. So this week, let's not be that ignorant again. So that is it on sentimental analysis. So check on the pair you trade there and see uh, where most traders are, where the minority are. In most cases, join the minority. Let's proceed now to what we call fundamental analysis, or we check on the economic calendar and see what we have in the news this week. So we use the Forex factory. Forex factory is what I use for checking on this. You can have the website and check. So you come and click on calendar. You click on calendar, and then when you click on calendar, you can now check what we expect in the coming week. So tomorrow being on Monday, tomorrow being on Monday, tomorrow being on Monday. So guys, you can see today something happened. Today is on Sunday in Canada and also in the US. You can see we had what we call daylight savings shift, and also in the US we have this. So there's a probability that tomorrow we are going to have a gap opening. That now based on this, we are going to have a gap tomorrow in the market, in the US pairs, in Canadian dollar pairs as well. So that is it. That is what was there today. Now let's check on Monday, which is now tomorrow. So when you go to the Forex factory and you drop down there, you're going to see this. You're going to see these flags. These flags will help you know if the news has a red flag, that it means is an high impact news. If it has this orange, it is a medium impact news. Yellow is low impact news. Then when it's gray, it's non-economic. And in most cases, gray is when we have bank holidays, and also like for today when we had the shift, the daylight savings shift. So tomorrow being on Monday, I don't see any major news tomorrow. I don't see any major news tomorrow. I don't see any major news tomorrow. So we proceed to Tuesday. On Tuesday, I don't see any major news as well. We go to Wednesday. On Wednesday, we are going to have CPI. We are going to have CPI on Wednesday. We are going to have CPI on Wednesday. That will come at 3:30 p.m. So we have core CPI and we have CPI. MM means month over month, right? So what is core CPI? Core CPI, or let me just start with the CPI. CPI stands for Consumer Price Index. Consumer Price Index. And talking of Consumer Price Index, we are talking about inflation now on the consumer level. We are talking about inflation in the consumer level. And we know when we talk about inflation, it's all about now how prices are changing for goods and services over a period of time. And in this case, the time is 1 month. That's why you can see it's month over month, right? So core CPI, this entails the entire inflation excluding the volatile assets, that is now energy and food, because uh, their prices can change anytime, so they are very volatile. They are not included in core, whether it's a core CPI, core PPI, core PCE. The moment you see the word core, just know that food and energy are excluded, are not included. They are excluded. The moment you see core, just know that these are excluded. And if they are being excluded, now we have the real inflation. We have the real inflation. So this is what the Fed or the Federal Reserve watches, the core, the core CPI. They are going to watch that so that they can determine what level is inflation in the US, right? So we will be expecting that on Wednesday at 3:30 p.m. I know maybe most of you might start asking, why has the time shifted from 3 initially to the news were coming at 4:30 p.m. Now news will be coming at 3:30 p.m. Remember, we have seen that today we had a daylight shift, so times have changed. Every trading session will be opening 1 hour earlier compared to the normal time. Initially, if it's London, London was opening at 11 a.m. But now, since we have the daylight savings shift, London session will be opening at 10. Every trading session will open and close 1 hour earlier. I hope you guys can understand that language. And trading session, or knowing when the sessions are opening and closing, is very much important. So if you are to trade sessions, the first 2 hours of each and every session are very important. That is the time when the market is moving well. So let's proceed. Let's proceed. So We had core CPI. So previously it was at 0.3%. Previous we had 0.3% expectation, which is now the forecast. This time there's an expectation of a drop 0.2%, and now there's high probability that we are going to have an actual greater than what? Actual greater than the forecast. Actual greater than forecast. No, let me. Last week we had what? Last week we had NFP on Friday. We had NFP on Friday, and you saw how the numbers came out. The numbers were negative. It was negative 92,000. That shows the US labor market is not doing very well. So that means many people are lacking employment. And if many people are lacking employment, what do we expect to happen to goods and services? You know that better. If you don't know, that is an assignment for you. That's an assignment for you. You have Google, you have ChatGPT. Just go and do your own research so that you can understand that. So before Wednesday, I'll give a conclusion on what I expect on the coming CPI. So we have core CPI, then we are going to have CPI month over month. You can see previous was at 0.2%. Expectation this time is at 0.3%. So for the CPI month over month, I can expect an actual greater than previous. So we might have the expectation of 0.3, or we can have a 0.4, which is actual greater than. And if that one happens, actual greater than previous, expect a bullish dollar index. Later we are going. We will as well have the CPI year over year. The previous reading was at 2.4%. They are expecting it to go up. Let's wait and see. So if CPI goes up, what is likely to happen with the Fed is that the Fed is likely to cut. Sorry, not to cut, but to increase interest rates. When inflation is high, the federal government or the central bank in every country increases the interest rates so that they can lower inflation, right? At 3:30 the same time, we have one of the FOMC members will be giving a speech. For the speeches, I don't mostly trade those, but you listen to them so that you can get the idea of what these people are trying to do. Something very interesting is here. These are low impact news, but very interesting, about crude oil. Again, we have 10-year bond auction. We will be doing sessions on fundamental analysis very soon once we are done with technicals, and I'll be teaching you a lot concerning this, because I don't know whether you have asked yourself a question: why is there a war but gold is selling? If you go and check on the US 1-year bond, when you check on that, you will understand something from that. So on Wednesday, let's stay alert. On Wednesday. So going to Thursday. On Thursday, we are going to have in the UK the governor to the Bank of England will be giving a speech at 12:30 p.m. Will be giving a speech at 12:30 p.m. Later in the evening, that is now at 3:30, we are going to have the weekly unemployment claims in the US. You can see previously it was at 213K. As I had said on last Sunday, that is, I expected an actual less than forecast, and it actually happened. This coming week, you saw what happened with NFP. So this coming week, we are going to have an actual greater than what? Actual greater than forecast. So if the actual comes out actual greater than forecast, that is bad news for the dollar. So we can expect a buy on gold, GBP, USD, Euro USD, and the rest, since the dollar will be selling. That is it. Also, we go to Friday now, the last day of the week. That is Friday. At 10 a.m. we are going to have a GDP month over month in the UK. That is for the pound. GDP. GDP stands for gross domestic product. GDP. The UK economy has been doing quite well recently. Um, it's been doing quite well. So there's a probability we can have an actual greater than previous. Actual greater than previous. Actual greater than previous, which is good news for the pound. Later in the evening at 3:30 p.m. we are going to have employment data release in Canada, employment change, unemployment rate. So you can see previous was at negative 24,000. Previous was at negative 24,000. This time they are expecting 11.1 thousand. So if the actual comes out actual greater than forecast, good news for Canadian dollar. And also, if actual comes out greater than previous, it's going to be a good news for Canadian dollar, because previously it was at a negative. It was a negative 24.8k. So this news will be something you can watch out if you deal with those Canadian dollar pairs. Later, we are going to have core PCE index month over month. What is PCE? PCE stands for personal consumption expenditure. Personal consumption expenditure. Remember, I told you when you see the word core, know that there are two things which are excluded. They are not included. That is food prices and energy prices, because they are very volatile. If they are included, they are not going to give the real inflation. And the Fed follows up this core. Core CPI, core PPI, core PCE. That's what the Fed watches. At 3:30 p.m. as well, we are going to have preliminary GDP quarter over quarter in the US. For this one, I can expect an actual less than, actual less than. So let's wait and see what happens on that. Then later at 5 p.m. we are going to have a George's job opening. Basing our argument with what we saw on NFP, I can expect the actual year to be less. I expect an actual less than. So that is bad news for the dollar. So I can expect sales on DXY, buys on gold, buys on GBPUSD during this time. That is the release of George's job opening. So that is it for fundamental analysis. Is there anyone with a question before we proceed? Is there anyone with a question before we proceed? Is there anyone with a question before we proceed? Before we proceed, any question? Any question before we proceed? So if no one with a question, then guys, we can go to technical analysis. We can go to technical analysis and conclude our session today. So under technical analysis, I'll be checking on dollar index, that is DXY. Then I'll check on GBPUSD and gold, USDJPY, oil. Yeah, those are the assets I'll be checking on. So if you have any other asset you would like me to check for you, just write there in the message section. I'll check on it. So first we start with the dollar index. We start with the dollar index. That is now the DXY. We start with the dollar index, DXY. Many people maybe might not know the dollar index gives you gives you the go ahead. DXY gives you the go ahead on how you are going to trade the USD related pairs, you know. Yeah, so as we expected previously, you can see the market was giving us inverted head and shoulders, and then the market boot. But I had expected the market to give a drop, but it did not drop. It went up. So that is how the dollar performed last week. So we are going to start fresh analysis on the dollar index. We are going to start fresh analysis on the dollar index. Let me clear everything over here, and then we can start fresh. Something else you guys should know is that we normally do what we call top-down analysis. Top-down analysis. We start from the higher time frames, coming to lower time frames, and that is how you should do your analysis. You should do your analysis in what we call top-down analysis. Top-down analysis. So in most cases, I start my analysis from weekly time frame, daily time frame, 4 hours, 1 hour. Then you can look for entries in the lower time frames like 30 minutes, 15 minutes, or even in the 1 hour time frame you can get good entries. So when you are doing your analysis, make sure you do top-down analysis. You do top-down analysis. Make sure you do top-down analysis. If you are looking for entries, make sure you do top-down analysis. And then before I start analysis, let me just give you something. Let me write it here. So as I just said earlier, DXY stands for the dollar index. DXY 16 DXY stands for dollar index. So if the dollar index is bullish, DXY bullish. If the dollar index is bullish, USD XXX, they will buy. Talking of USD XX, I mean every pair that has the US dollar as the base is going to buy. The examples are USD CAD, USDJPY, and USD ZAR. ZAR is South African rand. And XXX USD will do the opposite. They are going to sell. And examples here we have XAUUSD, that is gold, GBPUSD, we have Euro USD, NZD USD, we have another one, NZD USD, Euro USD, GBPUSD. We have another common pair which uses the dollar, but my main point here, I hope you have understood it. Now, the opposite will happen. If DXY is bearish, USDXX, what will they do? They are going to sell. And XXX USDs, they are going to buy. So they go opposite. I hope you have understood this, and I'm pretty sure it's going to help you a lot. I'm sure you have heard of what people talk of as correlation. So this is it. This thing will help you, correlation. But let me tell you, when it comes to gold, my friends, when it comes to gold, don't rely on the dollar index, because gold and the dollar index, they correlate about 80%. Unlike the other pairs, the likes of Euro USD, GBP USD, and the rest, the currencies, whereby they correlate but 95% plus. They correlate 95% plus. So if the dollar is buying, GBP USD will definitely be selling, unless the market is consolidating. But also, if the market is consolidating, the consolidation will be more effective towards the buy side. So we can now start our analysis. In some cases, you can come to weekly time frame and the market will look kinda what understandable to you. So if you face such kind of market, just go to the next higher time frame, which is monthly time frame, and you can start your analysis from there. So if you face such, you start your analysis from higher time frame, which is monthly time frame. Excuse. Now, allow me to just do something here. So now, looking on the entire market generally on this higher time frame, you will see that the dollar index has been bullish for a very long time. The dollar index has been very bullish for a very long time. You can clearly see that. You can clearly see that the dollar index has been very bullish for a very long time. Now, I just want to give you something, the overall overview of this market before we get to our analysis. So you can see the market has been bullish, and how it has been behaving. Allow me to cut through there. We have this as our number here, and then currently we have this, the current one, the current market is now here. So this is to show you how the market has been behaving. Market has been moving in two phases: an impulsive move, which is now the strong move towards one side. The market will consolidate or correct, buy sell, you know. Then afterwards the market will break impulsively. Currently you can see what is happening. So I expect this market to come, break, and continue going up. It might not happen this year, but it will eventually happen. I don't know when, but it will happen. So that is the overall overview on the dollar index. The overall overview on the dollar index. So let's now start our analysis. So if you look on this market, you can clearly see the market formed this kind of a double top pattern, an M pattern. The market dropped and it's now consolidating. Last month the market was bullish, current month the market is still bullish. But now what I can expect this market to give a surprise drop before we can now start going up. So if the market is expected to sell, where is the possible point for the market to come to? And here it is. We have an order block somewhere here. We have an order block there. We have that order block, and also it happens to be a fair value gap. So I'll be expecting the dollar index to come here, and this is supported by very many things. If you look on the current events, when we have whatever is happening currently, that is now on the war, and the US is actively involved. So I can expect the dollar index to give a drop to this point. Then from there we can look for bullish dollar index. Something else to check on currently, where the market is at. We had this kind of an order block, though for me I do not say it's valid one, but this one, there's a probability it will push the market down. There's a probability now this will push the market down. You can see even after the market tapped the area, it started having a pullback. The market started having a pullback. So that is what I can see on a monthly time frame. So let's drop to weekly time frame. Coming to weekly time frame, something very interesting. You can clearly see we have another block over there. Something very interesting on weekly time frame. So this happens to be a very strong supply level or zone. So we can expect this market to push down. So I don't see anything much on this, because now if you look overall what has been happening on a weekly time frame, the market is been consolidating. Market is been consolidating. When we will be looking on chart patterns, uh, the continuation patterns, we will learn of this chart pattern. We call it a rectangle. This one is a bearish one, so we can expect the market to break out of it and come to our point of interest before we can start buying. So that is weekly time frame. That is weekly time frame on the dollar index. That is weekly time frame on the dollar index. Let's see daily. On the daily time frame, how are things looking? So coming to daily time frame, you can see the market, how it's playing, how the market is doing. Now on the daily time frame, we have this point of interest here to watch here. This, and I believe this was the opening of last week, where the market opened with a gap, and so we have this order block over here, and you can see how the market is. So if this market drops, the first point to watch will be here, because by so doing, if you look on the market well, the market will have completed a very good inverted head and shoulders on what, on the daily time frame. You can see that. So higher time frames are for looking on the market trend. Then on the lower time frames, we look for entries. On monthly time frame, you have seen the market is bullish. On weekly time frame, you have seen the market is okay. Overall, that was it. On monthly, market is very bullish. But now coming to weekly time frame, you can see overall the market has been bearish for several weeks. On daily time frame, you can clearly see what is happening. Recently, the market has been bullish. So, as I've just said, this is going to be a point of interest to watch. This market drops, we are going to be watching this fast. If the market breaks out of that, we can now have our next target on the lower zone. So, that is it on daily time frame. I can't see anything much. Now, coming to 4-hour time frame, on the daily time frame, we could see a trend which was not clear. So, coming to 4-hour time frame, I believe I will be able to plot that trend. I have my trend line over there. So you can see I have two touches on my trend line. That is the support trend line. I have two touches on it. I have two touches on my trend line. Let me now plot my resistance trend line. And something else you should know is that don't use trend line for your entries, guys. Don't use trend lines for your entries. Don't enter the market because the market is at a support trend line or a resistance trend line. No, use trend lines to help you look for the market trend. Use trend lines to help you look at the market trend, but not for them to do what, to be used as entries. I hope you can understand that. Sorry guys, let's continue. So I was saying something about trend lines. I was saying that don't use trend lines for entries. Use them to show you the market direction of the market trend, but not for entries. So I have plotted both my support and resistance trend lines there. Okay. Now you can see what the market has done here on 4-hour time frame. Actually, the market has given us a sell confirmation. Market went up, then down, and then up. The market has given us a double top, so we can expect now the market to come to our point of interest here at 97.3. By so doing, if the market comes up to the trend line, we have a zone here, the market might come there and buy, which is still okay. If it breaks, if the market breaks there, let me Let me just do a fresh one. So if the market drops and then goes past this level, then after going past that, it comes back for a retest. We are going to have an head and shoulders pattern, which is a sell confirmation, and we can take on for long, long sales. We can take on long sales on that. So we will be observing this 97.3 level very much. This level, this is a point of interest to watch. So I expect the market to drop fast. I expect the market to drop. So once the market comes to this, we'll be watching how is the market coming to this. Is the breakout going to be a true breakout or a fake out or a fake breakout? And how do you know that the market gives you a true breakout? A true breakout should be impassive. The market should break impassively, very strongly, with a body candlestick. The market should break with a body candlestick. That is now a true breakout. But if the market is coming to a point of interest and then it starts consolidating, that's a sign of reversal. If the market now comes here and starts consolidating, that's a sign of reversal. The market will buy. Even if the market breaks out consolidating, that one is a fake out. It's a trap. Don't rush. A true breakout should be impassive. The market should break very strongly. Like now the current market, if the market is to continue consolidating over here, it consolidates until it breaks out. I am not going to take this as a true breakout unless after the breakout the market will come back for a retest, then I can be comfortable with that. But if it's just a correction, a consolidation, a corrective breakout, that one to me is a fake out. I'll not rush for that. I hope you guys have understood that. So coming to this 1 hour time frame. Coming to 1 hour time frame. You can see how the market looks. Also, the market on 1 hour gave a very clean double top over here. So you can see that the market is dropping. Guys. This is dollar index, and I explained in the beginning what you expect if this happens. So that is it on the dollar index. We can check on GBPUSD and the rest. So remember in the sentimental analysis part, we said for GBPUSD there is high probability that we are going to have what? We are going to have the pound, the GBPUSD going on a buy this week. You can see here 40% of the buyers, which is now the minority. So let's check on the chart and see how things are. So GBPUSD. You. Yeah. Okay, so let me do a fresh analysis. So in some scenarios like this, what I normally do, I use a different approach. Every market, according to its condition, you can have a different approach. So in this case, I'll mark the recent high, that one. I'll mark that one since the market is here, is almost there, so I'll mark that high, and then I'll mark the low, and coming to the low, I'll mark this one. So after marking the high and the low, I have now the playground. The market can either go up or come down to this. So that is the playground here on the monthly time frame. So let's go to weekly time frame. Let's check on weekly time frame. Now, checking on weekly time frame, you can see last week's candlestick how it was. the market dropped, came to this fair value gap or imbalance over here. Market pushed to this and it respected, and then you can see it went up. It went up with that pullback. You can see the market after tapping this order, fair value gap, the market is now going up. So you can see how the candlestick last week closed. We had this order block over here which did not hold the market, and the market also closed above it. So with that, the market has high probability of doing what? Okay, the market actually closed. So there is high probability that this coming week the market will give a short drop back to this, and then from there we can look for buys. We have another one here. We have something here to look at, so we have to be keen on that. This is weekly time frame, so these zones are very sensitive, very strong. This one, that one, that's a point of interest to watch. So that is at 1.3600. So let's go to daily time frame. Now coming to daily time frame, you can see what is happening. Over here. So as I've just said, I can expect a short drop, and then we can start going up. We can start going up after that short drop, and then you can see that the market has been doing what? The market has been trending in this channel. The market has been trending in this channel, which is a clear downtrend. Now, as it looks, we can expect this the market to break out of this, maybe to our zone over there, give a short retest to somewhere here. We have a very strong zone, but I'm not going to plot it. So give a retest back to this, and then from there we can take longs on this. Remember, on the other hand, we are expecting the DXY to be coming down, so you can see that, right? Yeah, this is the daily time frame. Don't forget that. On the 4 hour time frame, so on the 4 hour time frame, you can see that the market formed a double bottom, which was the buy entry. This is the neckline where we have this zone. So as I've just said, I'll be expecting this market to give a drop before we can continue going up. I can expect the market to come there, and then we can continue going up. And don't forget, there is still war ongoing. Yesterday we have had attacks in Qatar, Saudi Arabia was it attacked. Yesterday we had several countries were attacked with missiles, so the war is still on. We expect the market to open with gaps because of the war, and again because of what? Because of the shift on times, daylight savings. So that is it on GBPUSD. That's my take on GBPUSD. I don't see anything else on it. So yeah, that is it on GBPUSD. So I can go to which other pair should I check on? Any other pair? So I can check on gold. XAUUSD. Let me check on gold. Let me check on the precious metal. So we're going to have a fresh analysis all the way from the time frames, dropping down. So for gold, the approach is very different. Remember, the market just gave us the all-time high recently, so I'll mark the high over there. Again, another point of interest is this one, this high of last month, but 1, but 2, but 3. So I'll mark that high. Let me go to weekly time frame. You can see current month gold is kind of bearish. So where I have marked, when you come to weekly time frame, you can see we had another block there where the market came to and then reversed. We had a very strong demand is the level there. A very strong demand. We had a very strong demand where the market dropped to and then it reversed. So if the market keeps on dropping, we can expect now the market to go below this, but it's gonna take time. It's gonna take time. Let's wait and see. So again, another point to watch currently is this one. The market has already tested the level, yes, but it might come again to get enough liquidity to go up and give us a new high. I expect this market to go to 6,000 soon. But before then, let's see how things are going to unfold. Now, this is daily time frame. On daily time frame, you can see up there we have another block, which in most cases when we have another block, we normally have a fair value gap up there. So this is how the market looks like. There's a probability now in the opening of this week the market might come here, and then from there you can start seeing the market coming down. We might expect something like that. This is at what? 53.60. 53.60. Remember last week we have had a very strong resistance at was it 5200? We have had a very strong resistance around that level. So that is a daily time frame. Let's come to H4. Now coming to 4-hour time frame. Coming to 4-hour time frame, you can see the market is having this kind of trend. The market is trying to form this